Hello, hello, hello. Happy Thursday. How's everyone doing? Let's see who's here this morning. Good morning, Patrick. Good morning, Sterling. Sterling's at work already, but thanks for tuning in, Sterling. Godo morning. You corrected. Good morning, Jacob. Good morning, Royal Palms. Good morning, David Atkins. Good morning to people. There are lots of people in the background. Jump in the chat, please. All right. What do we got going on? We'll wait for more people to come in. We had initial jobless claims and continuing jobless claims coming out. Both dropping. Continuing jobless claims still elevated. Not dropping very fast, but not a bad print overall. Good morning, Martinez. Hello, Charles. What else? We just got a lot of Fed speak today. We got three Fed speaks. Three Fed speaks. We got 4 and 8 week bill auctions. But it's quiet. Besides Fed speak and whatever crazy tariff stuff that goes on, it's quiet. So that's what's going on today. We had Delta Airlines report and was a big gap up above the 200 today. So that'll be interesting. I'm going to watch that for a possible pullback into the 200. Tomorrow we just got nothing. Rigs, the WASD report and rig counts. Oracle's up, all chips. It's the massive run. Nvidia at $4 trillion market cap now. Oh gosh, it reminds me so much of the Cisco days. But the trend is still up until it isn't. AMD still running. Tesla up. I guess they're expanding their robo-taxi, but I'm still watching for I'm still watching for rollover plays in there. Everything else is sort of mixed to down. Not a super strong market this morning besides your AI and chip-related stuff. Groups, basic materials, the strongest, followed by technology, only up 21 basis points. Comm services and utilities lagging. Fed watch still is 93% for the pause in July. Fear and greed back to extreme greed. Schiller PE 38.15. What are my earnings? Where are my earnings? There they are. Yeah, Delta was a beat. I did not look at ConAgra. But after closing, we got Levi's, WD-40, but nothing that's going to be market moving overall. Who else do we have in here? Hello, Charles. Good morning, Bull Strike Cheetah. Good morning, Anissa. There we go. Good morning, John. All right. Thank you for tuning in. So, now this is my favorite because we still have weekly cycles. So far, sideways correction on a weekly basis. If I pull off the graphics, you see we're pausing. We're letting the 8 EMA come up. So far, this is just a sideways potential correction. But we do have a potential double top in play. So we broke out of the channel, moving back up to establish the double top pattern. So now what's key for me is I can continue to look for very short-term pullback plays unless we triggered a double. If we triggered a double, then I'm starting to watch for the bigger pullback. What would trigger the double? First off, confirmed on a break below 62.46.25 and then a follow-through close. Below that triggers the double. Other than that, what would invalidate the double? Well, if we put on our reverse little mini harmonics, if it trades above 63.55, the potential double is invalidated. So on any upward trades that take out the all-time high, we have 63.44 as a target, 63.55. Until that happens, my key level is a 75% harmonic, same one I talked about yesterday. We just spiked through it, but closed back below it. That was my target, 63.11. We get through there, 63.22. To the closing high. So that's my target area, 63.22 to 63.24.25. Morning, Heinrich. Good morning, Harold. Good morning, PMG. Did I say good morning to John? If not, you got two Johns. You got two shout-outs. So those are my exact targets. We take out the closing high, then it's the all-time high, and then it's 63.44 on a pullback. Watching the 8 EMA. My first key level is right about 62.80. And then my major area is somewhere between 62, 68, and roughly yesterday's open at 62.72. That would reconnect it with the rotation zone. We start breaking below there. That's where I get patient, because then I'll watch for this to get potentially at least taken out and confirmed. We still have daily cycles heading down. We still are coming out of overbought. Even if we push up again and take out a new high, that would just set up another divergence. We do have waning momentum up here, even on the weekly. It's starting to roll over. But the trend is still up until we trigger something. That's why I'm really happy we have the potential double in play, because it gives me clear targets. It is against the rotation zone, but I can start looking for pullback plays if that were to trigger. NASDAQ, we also have a double. NASDAQ eked out a new high yesterday. Okay, the invalidation point for the potential double is above 23,183.25. And we have a cluster right below it, 23,170 to 23,185. So if we do take out the highs from yesterday, that's my key target area. Mine is 23,142. On a pullback, I'm looking between yesterday's open of 22,906.50 to this cluster right here, 22,914, with the rising rotation zone. For the double to confirm, it would need a trade below 22,779.75 and a close below that to trigger. All right, remember, weekly cycles still pinned to the top. This market's just, and we are very extended from the 8 EMA, but there is no topping pattern triggered yet. At least we have one now. Okay, TMSC sales surge. It might be even a bigger AI chip winner than NVIDIA. I love when Barron's produces headlines like that, because then I actually look for a contrary thing. And there's a mode in that potential double top play and daily drool. That's why, I was watching for a slightly bigger pullback, but now we rotated back up. The rotation zone is held, and we set up a pattern. Do we immediately get bearish because we have a potential pattern? No, we do not. Because this market is still very, very strong. It is overextended, but at least we have a pattern now. Dow, frustrating yesterday. But that's the nature of trading. Triggering the double. Spiking down on the tariff news and then immediately bounced. But this spike down took the double out. So we don't have that pattern anymore. So it just happens. All right. So my key level again now is 44 about 825 to get bullish. Breakdown is below about 44,465. Other than that, there is not much to talk about other than that on the Dow. Still holding the rotation zone. Now, if we do start breaking down in the Dow, I forgot to raise this. Sorry about that. If we do break down in the Dow, especially below yesterday's low, my first target area is 44,150. Russell, also potential double top territory. Okay. The invalidation point would be if the Russell trades above 2296.3. The confirmation point would be a trade below 22,214.9 with a close below that to confirm. The interesting thing is the 200 and the rotation zone are in the way. But we could easily see a pullback to that level if this were to trigger. Other than that, looking for still pullback plays. So the only thing that will shift this is if we get some kind of big momentum bar to the downside. Then I will be patient on pullback plays. Because the VIX, VIX just grinding lower. We're still in sell volatility mode. Sell volatility, buy equities has really been buying AI. And it's all pile into AI again. DAX, stalling out. I was watching 24,698. Just watching that 24,700 area. That's where we're stalling out now. It still hasn't invalidated the potential double. But the key pullback level for me is 24,335. Yields dropping a bit yesterday to kiss the trend line goodbye, dropping below key support, but coming in with a 200. Cycle's trying to roll over, so I'm being patient, watching for now another potential bottoming pattern in the yields, but patiently so. 30-year yield also pulling back a bit yesterday, but we'll be watching for, again, patiently watching for trend up patterns again. Crude stalling out at the 200, pulling back, but here's the deal. See this down move that confirmed a double and this up move, the double never triggered and got invalidated. So you cannot use those targets. So what am I looking for? Since that got invalidated, I want to leave that on and just show you. Well, we just hit my first target, 67.17. My next target is between 66.73 to 66.85. And again, the only way I can turn this into more of watching for a bigger pullback is if we close below 66.73, at least on a 4-hour basis. Because we are getting oversold. But this is still a pullback. Come on, daily chart. This is still a pullback. So we hit that very key level, could not get above it, and now pulling back. Is this a short? It's a very aggressive short-term short because we have key areas. So if you're aggressively shorting this, again, if we close below at 62.50, I'd be watching that 50% harmonic and the 87.5 right around 65.90. What do I think about silver and silver miners? Well, we can get to that in a second. Gold triggered. Well, it went through the high of yesterday, which was a %B buy bar. It's a very aggressive high because we got cycles at the top in consolidation, but it is a high, so this has to be managed very, very closely and follow through on the close. It has to close above yesterday's high, and I would not give stops a ton of room in this. That's where context matters, okay? Because we didn't pull back in the rotation zone. The rotation zone is actually flat to against us. Context matters on these setups. So that's why on these kind of setups, I will aggressively manage a stop for a long in gold. Silver. As long as we still technically have the double top in play on a weekly basis, again, might never trigger. Come on, let me change it. There we go. So until that were to trigger, I'm still bullish on silver, Anissa. We got a pullback in the rotation zone. This was a rotation zone buy above yesterday's high. It's got to fall through at the close, which looks like it's going to do. Okay, what would take this potential double? And as long as this doesn't trade, and the first warning sign is a close below the rotation zone for me. Have we closed? Look at this pullback. We've closed in the rotation zone multiple times. But look at all the dips in the rotation zone. As long as we do not close below the rotation zone, that would put me in short-term neutral mode, and the only thing that would put me in bearish mode is if we were to trigger this double. Otherwise, it's continue to look for buy setups in silver. And you can still look for buy setups in silver miners. All right, but those are slightly longer term plays. Now, if we were to trigger this still weekly double, then would I be looking for setups in silver miners? No, because the futures are the shorter term plays. The miners are the longer term plays. And by the way, we are long from Slice. We are long PSLV also. So we've been long Sprott Physical. And I like trading. If you're trading the stocks, I love trading Sprott Physical Silver Trust, and I love trading Sprott Gold. Those are my two. Versus SLV or GLD. I like the Sprotts better. Just a little. That's my preference. Copper also holding up with the 50% tariff. For short term, it's holding the 4-hour rotation zone, but I need to now see it follow through above 571. But this is super aggressive. And would I be piling everything in the copper at this point? No. Because, again, something can change. We do 50% or over 50% of our imports of copper, and that could be something that changes on a dime. So the things I'm still focusing on more so, if you weren't already long copper or took advantage of the percent B buy and rotation zone buyback here, I'd be personally very patient. Reward to risk isn't there anymore. Dollar index still. We have now the flattening out rotation zone again. 1-day pausing bar. I'm still looking if we start taking out this 97.40 area. We start taking out that. Watching for a retest of the trend line and the 97.80 area. That's what I'm looking for short term. Euro still channeling down. Is there a great sell setup? No, but if once we get to cycle bottoms, I'll possibly watch for another rotation up in euro and then a good sell setup. Yields on the yen still climbing. That's why I'm still watching for U.S. yields to climb after that pullback bar. The yen paused a bit, but immediately rebounded. And the currency still watching if it can get some traction above this 146.81. Spiders, we are in potential double top territory. So the same thing goes with the S&P. If we get a lot of downside momentum, it'll be hands off for short-term buy setups. If we don't, if it's just normal pullbacks, I'll continue to watch for buy setups unless we trigger the potential double top below 617.87 with a follow-through close. Other than that, right now we're slightly gapping down, but that's like we're 20%, 20 cents, 20%, 20 cents below yesterday's close. We start taking out this 624.20 area. I'm looking for 625.22. Then the highs. What would invalidate the double is above 628.38, but I'll use the extension harmonics, the reverse harmonics going upwards. Very key support area for me is between 620.50 and about 621 in the short term. The Qs also. Potential double top territory. All right. Actually, we're gapping up now. We're gapping up. The all-time high is 557.20, which would be my first target. Sorry. Yeah, 557. Yesterday's highs. Made a Mr. Bungles there. 557.63. 557.20, I'll be watching short term, but really 557.63. We take that out, 558.15, and then 559.11. Very key support area now for me is run this 553.50. Sterling, you agree with my comments on Barron's, the most financial news media? Jim Cramer, is it with a C? Take a look at TSMC oversold on the weekly. Sorry, I typed in TSMC. See, what I'd be looking for with that, especially now, is it still bullish? Yes. Would I be shorting this? No. Not with Coco's money. Would not even put Coco's money at risk here. However, this thing runs higher, it's still, we are stair-stepping down. We got waning momentum on the weekly. This thing gets in double top territory, and then we're to trigger. I mean, there could be a front run pattern before that. And look at the weekly. Very overextended. Now, this is aggressive because it would just be back into support, but this, very overbought. Everything's getting hyper overbought. I'll reiterate again, just because something's hyper overbought does not mean it has to drop just yet. Remember, things can remain overbought or insane longer than you can remain solvent. So that's why I like having the patterns. We don't have the pattern yet there on. But other things like AMD. AMD now, gapping up. AMD, I'm watching for it to get above 144.19, putting it in potential double top territory. Yesterday was Tuesday was a percent B buy. I don't think I shouted that out in here. That's why you got to learn it for yourself. But Tuesday we set up the settings, again, for anybody new. 5-period percent B Bollinger Band, high, low, close, divided by 3. 1 standard deviation. It pulls back below 0. You watch the next day for, first of all, it to break and then follow through with a close, which it did. This is also a rotation zone buy. I love when they couple together. Following through, now we're getting the gap up. All right. First target, key area, stop raise for me. We're above it now, 140.63. Then 142.41 was the next stop raise, which we're gapping above now. Next target, 144.19, then 145.97. Now, 145.97 is a major target. Why? Key gap reversal open, spike through and close below, and then key retest with a high and the 87.5 harmonic. So that's the structure with cycles getting to the bottom. But what would that look like on the weekly? We'd rotate back up and have, again, a massive weekly topping, potential topping pattern. This thing could continue to run because it has closed above the 62.5. It could actually return to the 75. URA. What's that? Is that uranium? Uranium? Let's do the count off for the double. 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6. Confirmed. So this did not extend too far. It's confirmed, but we had an upwards close yesterday above the trigger point, so it has not triggered. What's nice about this is confirmed, not triggered. Okay, this will be interesting because this is also a percent B buy and a flat rotation zone buy. It has to follow through against yesterday's close with a super tight stop. Because if this were reversed and closed below 3670, it would trigger the double out of the way of the daily rotation zone. And then I'd be watching for the pullback to the weekly. So that's your uranium analysis. Double is still in play. We have an aggressive percent B buy that's potentially going to be above the high today, but it has to follow through to the close. If this fails and reverses and triggers that double, I'd be patient on any uranium buys. They do lag a bit. That's why I said shorter term, if you're trading like silver, gold, and everything, shorter term, you're looking at the, like, if you're trading stocks, you can trade SLV or GLD. I don't care what you, again, I don't care what you trade. But I like the Sprots better. Longer term, miners, but that's where I like watching for weekly setups. And that's why I also said on silver, if this were to trigger this double, which is still technically valid, this pullback was not big enough to invalidate it. If it were to trigger, then I'd be very patient on miners. Because miners do lag. Now, miners, you get, because they get really beat up when they do move, you get catch-up plays. Tesla, I'm still looking on any pops for rollover plays. Do we look at NVIDIA? NVIDIA, 4 trillion market cap, took out the next harmonic yesterday. Forgot to raise the short-term stuff. Next target, 169.76. Next major target. So, Hey, Kevin, you're a little late today, Kevin from Lakeland. How are you doing today? And you're very welcome, Anissa. Thank you for tuning in, everyone. All right, let's just peek at the S&P. Let's just peek at the S&P. Let's peek at it a little shorter. So now here's where we do the analysis within the analysis. Hey, if we get above 63.0850 and then we're to take out this low, potential double top. And it would just be reversing this little mini move. So, and other than that, if we don't trigger something that looks like we're going to hit that potential double top, remember, I can't stress this enough because I call out potentials and then I get an email or something and say, you said there was a double top. I got bearish. No, it means it's a potential setup. So this gives me, guess what? If this pattern does not trigger, guess what I'm looking, until it's invalidated, fine, but I can watch for pullbacks. I can watch for pullbacks. Now you're against a very strong topping area, but you break through these tops. You break through, look at this, all this top, you start breaking through this, it could run to the upside, back to easily that 87.5 area. So I would not be looking for bearish setups unless this triggered or unless I got another bearish setup meantime. I'd be looking, especially if it can break through here, you could get some momentum to the upside. If this holds and we trigger this potential double, then I'm looking for pullbacks back to, look, see, we're in the potential double territory now, right? There we go. What does this look where prior support was? Look where this is. Boom. Does that mean it guaranteed to go there? No. But I'd be looking on a pullback. See, we have this area. Again, it's areas. Learn to think in areas. See this area, this key close right here, this little spike low bounce, danced around that area, danced just below this bottom area. This is our targets for the doubles. You got a prior harmonic there. So if this were to trigger, that'd be the area I'd watch for. Other than that, if we pull back and then rotate back up, be looking especially for breakout plays because this could run above 63.11. Not trading advice. You have to manage your own stuff, but that's how I set up the analysis. Hope that makes sense. CAR now is a nicely formed potential daily double top against rotations, and we'll just take a quick look at that, then I got to run. Yes, it does. Yes, it does. Thank you for shouting that out, Sterling. Again. Oops. So, other than that, remember, we've still closed above the 62.5. Now, even let's say this pulled back in the weekly rotation zone. Would that invalidate any longs? Would I get hyper short Avis group? No. But I'd be looking for pullbacks to potentially reestablish longs. And what's interesting is the 200 is just below that. So if this were to trigger, I'd be patient and look for slightly bigger pullbacks. CAR's been on a very big run. And it's closed above the 62.5. So there can still be magnet price upwards. Yes, they do. Again, there are probably... That's why you don't put all your eggs in one basket. You don't. There's nothing is guaranteed in trading. If you're looking for guarantees, you're in the wrong business. But if you get your analysis correct and analyze the market both ways, you can start to say, remember, trade with the trend. The trend is your friend, but you identify, so would I be hyper aggressively short this? Not unless we start to get momentum to the downside. And then it would just be a short-term play in the key support. The better play for me would be let it get in the key support and then look for a potential buy setup. I just want to see where the tick opened. And would I be hyper aggressive this to the long side yet? No, because we did not look. We had a pretty, that was not a very strong tick opening. So let's see what happens as the tick pulls back a bit more. Tick pulls back now. Could we hold this key support without triggering the double and then rotate back up? Yeah. Let's say we hold this key support and we start rotating back up. That could be an aggressive buy pattern to then retest this high area from before because it did not trigger this. So, all right, that's a little micro time frames. If you don't trade on the micro time frames, you're looking for pullbacks on the macro time frames, like wouldn't be trading below the 1 hour rotation zone. Okay, even the 4 hour rotation zone. You dip in here, look where that targets is on the 4 hour rotation zone. So if we did dip down there, they're really nice on the 4 hour. You're welcome, O'Day Green. All right, everyone, I don't see any more questions. I hope I didn't confuse things. I hope you can learn something from this. And with that, I shall talk to everyone later. Bye for now.